following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour right here on TFNN.com, TFNN.mobi. You can watch our screens and see over 9 hours of live trader commentary each and every day, or listen to it on your mobile phone while you're out and about. Right now, let's check where the markets are at. We got the S&P is up about 6 points right now. We got the Russell up 3. NASDAQ is currently up about 6 points as well. Dow is up about 81. Looking over at copper, up nearly 1.5%. Gold is pretty flat on the day, only a couple points. Silver up a little over 0.5% there. And looking over at natural gas, looks like it's down about 0.5%. We got oil down just 30 cents on the day. No major impact from the oil inventory report. We got corn is currently down 7.5 points. We have soybeans up 12. Euro dollar is currently up 15. We got the Aussie dollar up 22. Pound dollar is up 8. Dollar franc up 5. Dollar CAD up only 25 with the interest rate announcement from today. And we'll look at that here in just a second. Looking on over at dollar yen, we're up 33. We got a Aussie yen up 52. We got euro yen up 56. Pound yen's up buck 36 right there. So a nice big move on pound yen. I love pound yen. It's one of the most volatile pairs. And euro pound is down 25 pips on the day. All right. So we got that caught up. Let's go ahead and take a look over here. And let me see what we got on the roster, what we had this morning, and what we have going on tonight. And let's see, we might actually even have a trade on now. Looking over at, let me pull up a chart. We'll look at this one, and we'll talk about, maybe talk about Google here in just a moment. So looking on over at the dollar CAD, and it's got traders always sending me in different trades. I like to look at them, see what we got. Yeah, looks like we got a nice potential buy right there. Little P1 trade, phase 1 of a boomerang. So it's called the launch phase. And usually looking at it out of the money, you could do an in the money of the trade. It's depending upon, your preference and style of trading. And from what I see on that, 1.0997 would be an option. Or, let's see here. We can go down. We'll look at it a little closer. Look at just the dollar CAD. So that'd be your in the money. Already pretty far in 1.017, 1.01017. And so I want to look at the range. How far do I expect it to go? Okay, I expect it to go up to 1.019. That'd actually make the 1.017 a decent trade as a potential trade right there. And again, simply buy on the 1.1017 and then getting out before it gets there. So getting out at about $43 on the trade. And like I said, very, very simple trade to do. And just based on, popping right on up there. I'm really careful on my in-the-money trades, front part of the hour, just because it takes a long time for them to decay. So you really got to get that movement out of the money. They actually decay pretty slow at the first half part of the hour there. So they can be pretty decent. All right, so that's one simple trade. Let's go over, we'll look and see if we see anything else before we focus on Google. And we will do some more. If we have some time, we're going to do some more option education. Okay? And let's see here. I keep getting my global crosshair right there. Somehow that got set into one of my templates. But let me go over here and I'll just save over it. There we go. So we got that one up. We'll let it do its thing. It's out of the money. I don't even have to watch it. I don't have to worry about it. It's a small risk. And then let me go over here. I'll pull up a gold chart. See if we got anything going into the last part of the hour here. And it's actually going to be 1:30. So I'll even go in on these and I'll set my ranges to 30 minutes. Makes it just real easy for it to expire right there. Let me see things in perspective. On my high to low and on my close to close. And once that is done, then I'm able to zoom in on it a little bit and go, okay, where are we at? And see if I get any kind of volume break that might confirm a trade. We'd have to get it pretty fast. Have to have my finger ready and on the button. So we'll see what happens over here on that dollar CAD. That one plays out. Simple out of the money trade. And one of the things, I've been working with some traders, been talking to them about it, and when they're doing a system, one thing we talked about is you really got to focus on doing every trade in that system. You can't hop between 20 different instruments. So one of the things they're working on today is really focusing on taking every trade on a single instrument, which they're finding a lot of times is harder than they'd think. One, just being ready to flip in a moment's notice. You're long, you got to go short, you got to go long. Not getting married to the direction of the position. So it's actually really good because it gets you out of the habit of having to be right. And it's, we talked about the psychology of, as twisted as it sounds, as soon as you get in a trade, assume you're going to be wrong. So that way when you get a signal.
The show is produced every business day.
That was weird. So when you get a signal going in the opposite direction, then that's subliminal advertising, by the way. When you get a signal going in the opposite direction, then you're ready to take it because you're okay with being wrong because you've already admitted, hey, I'm probably going to be wrong on this trade. And it's just a matter of that. It's not like having a negativity, pessimistic outlook. It's just going, hey, you know what? I have no control over this trade winning or losing, going up, going down. All I can do is set my take profits, set my stop losses, and let it do its thing. And then follow it. And so instead of having an expectation that this trade has to win, I have to be right, I sort of free myself up to allow myself to potentially be wrong on the trade. And by saying, hey, you know what, I think it's probably going to go the other way. So I'm going to go ahead and just, instead of changing your entire position, just be ready, be open for that next position. And I know it sounds so strange, but it really is helpful to get your frame of mind in the right, reference there. Let's see here. So we're watching gold right now. We got a 1303, which is right at the money. We're going to have to pop to 1306, which would really be out of the expected range during this half hour. If we get some volume exploding, but we got about 15 minutes for that to happen. So I'll be looking at either 1303 or 1306 on 1:30. If you want to watch that, just looking at the 4 minutes, really waiting for expected volume to break out. All right, so we'll go ahead and we'll throw this one over here in the corner. We'll take our dollar CAD, we'll throw that over in the bottom left here. Let it do its thing. It's trying to work its way up. We'll see if it can. Gold is moving up. It's doing its thing. It's just I don't know if it's going to be able to pop all the way up there. But if it does, this would be the trend trade, and this would be the premium collection trade right here. So both of those at a buy. And but again, we need that volume. It's starting to bust. It may do it. And then if it busts right at the end, that'd be perfect. So we're getting close. But if you look at it, we're at 283 on an expectation of 368. So 293 on an expectation of 368. So we're getting there, but we're not quite there yet. And new minute. So yeah, we're probably not going to get it. We're going to go into 120 before the end of this time period. And it may not even break the high. We'll see. But we did not get an exceeding volume on that trade. Therefore, no trade. Okay. So I'm not expecting a trade to hop up there. I'll keep the chart over here on the other side of my screen just in case it does happen. But don't have high expectations on that. And then what we're going to do is we're going to go over. And the real trade, the real focus today is checking out Google. Okay? As far as Nadex, I don't know if we're going to have a trade right now. We're going to look at everything, and we're going to talk about it a little bit and go through the different pieces. Okay, so we got Google up over here. And obviously we can't trade Google on Nadex. They're only on commodities and Forex pairs. But Google is a significant part of the NASDAQ. Its earnings will be coming out today. The press release will be at 4:30. The wire release is always right at 4 to 4:01 p.m. And it usually causes a pretty nice rock in the markets in that last 15 minutes. So what I like to do is I like to look at a couple things, but I usually expect easily to hit a deviation level. And that puts us pretty far out there right now, which is nice. I like that. So if I look at a deviation level right now on the NASDAQ, this is based on the option pricing from the NQ futures of how far the NASDAQ futures expect the market to move. Then I can find that, we're really, this is a nice setup. We'll look at these, especially since we're in the center right now. We'll look over here, and I'm going to get rid of the simulator for a second. Don't need all that information. Okay. So right over here, looking at where we're at, we're basically talking about 35.41 is sort of our expectation, our upper expectation. And we only need dailies on here. That's all we're focusing on. It only goes up to 35.40. Okay? Even on the daily expirations on NASDAQ. And then as low as 34.40.75. And sort of interesting, if you look at the difference, where we at right now, the market is currently trading at 35.04. So the market's currently right here, right in the middle. So as you can see, the binary's priced right at 50 on the mid. And let's check out. This will just be something to see if we got some volatility skew built in. Little option lesson for you. And so if I go and I say, 35.40 minus 35.04, that's 36 points away. But let's see what happens on the downside compared to the risk. And we're going to notice there's going to be a little volatility skew on the downside. We'll be back right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. All right, so one of the things I was talking about first there at the top of the hour was just the volatility skew. We have about a 550 risk and reward right now on the NASDAQ, but notice that on that trade, up and down, okay, if we're looking at this at the current moment, what we're actually going to see is that that risk is 36 points up. We have a $5.50 risk, and then pretty much 44 points down, we have that $5.50 or now $6 risk. It's just fluctuating a little bit. So there is what's called a volatility skew. Usually you have more implied volatility built into the downside, to the put side. Puts are usually a little more expensive than calls. It's called volatility skew. And so we're seeing the same thing in the binaries today. So just be aware that that doesn't always mean that it is going to go down. It just means people are more likely, more of them are going to be long and hedging with puts. Most people think long versus thinking short and hedging with calls. I'm also taking a look over here at Google, and I'm looking at the CBOE volatility indice for Google, which can be pretty helpful. Just to let me knock off just some of the indicators out of here. We'll get that, and most of this just out of the way. Okay, that makes it nice and clean. So I have Google, and I actually have the volatility indice on Google right now. And Google's up a little bit, so the volatility indice is dropping some. But this is the implied volatility built into it. Okay? And we can widen that out, maybe make it a little easier for you to see. See if it'll do that on the lower side for me, or if it just does the upper one. Yeah, I was afraid of that. Here we'll go in, and not my favorite thing to use, but I'll throw the candles up on there. And I'm not always a fan of candles because, well, candles can plot wrong. They can plot the wrong color. And let's see here. Okay, so you can see they're pretty much, for the most part, opposites of each other. We're seeing a little more dramatic move. Notice that's big down move implied volatility, but that very small up move in Google right there. And we can go back. We can look at additional time, look at more time in it, and put the whole chart together. We'll usually see the implied volatility drop off after the release. So it actually started dropping off as the market's been rising, which we'll also see implied volatility usually go down when the market rises. Sometimes you will see some odd things, like you'll see right here, implied volatility is dropping. The market went up. Now here we had a big gap up, and it came down. Implied volatility dropped. Usually, it's not going to go down whenever the market's going down. So that's where I want to go over, and I want to go, okay, well, is that really a down candle? And I'll actually go in, and I'll pull it back up, and I'll switch it over to an open, high, low, close bar, just to make sure. It's like, okay, yeah, it did gap up, and it went down on that one. But a massive gap up, but implied volatility ended down on the day, even though the day was a down day. And let me put that back over just to make it easy for you to see it. But the market's still going down. Now the market goes down, and implied volatility finally starts rising. So it's sort of when you see these, these two different things happening right here, that sort of gives me a warning sign that something's up whenever the opposite happens of what should happen. You just see it sort of going back and forth, back and forth. Anyways, but today implied volatility going back down actually makes things a little bit cheaper in the range there, and so that's really as far out as we can go for $5. Now, usually the way I try to play this is, and it's all up to you on how you want to play it. I usually try to go in and layer to where I can use the profit of one level to maybe cover the profit of the other levels. Okay? So I go, okay, what's a higher probability play, and how can I put that together to maybe best stack the odds, in my favor? So, if I was risking $25 to make about, $20, $25, could that be, a good play for me right there? And I go, okay, well, first I need to look at the strike. Let's see, 35.28. I go, would that be one that I'd want to do right over here based on the risk? Do I think that's a high probability level of being hit? Okay. And so we'll dive a little bit deeper into it as we get back from this break. But again, those earnings are going to come out, and this is usually a great trade. We'll see if it turns out the same today. We'll be right back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. The dollar CAD trade's looking a little weak at the moment. But we're checking out the NASDAQ for the Google earnings release. Last 4 to 6 of these. There's only one of them I wasn't able to do. One of them I did sort of weird because it moved up so much I was able to modify it. And one of them was Google came out early on their earnings release. So wasn't much I could do about that. But looking at it now, checking things out, basically what I like to do is I like to layer in the different contracts. So what I'll do is I'll put one on so that way, hey, if that one profits, it more than covers the other one's losses. But, if the next one profits, I make even more. If the next one profits, I make even more. And it keeps going up the list. Okay? And let's break this down now. Let's look down at a little smaller time frame. And let's see how it's all lining up. Update this. I don't know how it got to be that wide there. Let's put both of those on just normal candles. Okay. Space it out. I don't know why it's so... There we go. And we'll go back over to this one. Basically got these candles down to 1. All right. So this sort of lets us see, what's going on with implied volatility. How's it all playing out at the moment? And there we go. But watching, it's dropping down. IV starting to go back up a little bit. You know, we're sitting right in the center. We're sitting right at settlement from yesterday on the NASDAQ. It's like everything is just waiting to see exactly what's going to happen. So let's go ahead and talk about what is going to happen and how this is going to play out. And what we got is we have Google is going to be, again, releasing. They're going to have their press conference at 4:30. But the wire release time comes out earlier than that. And they're, among all of the companies out there, besides that one massive screw-up where it got released like in the middle of the day, which if you would have got in early, it would have been fantastic. But totally missed out on that one. I was really pissed. I'm like, that's my favorite trade every quarter. But the wire comes out at 4 o'clock. Okay? So that leaves you 15 minutes before the NASDAQ closes to be able to take advantage of it. And now when it comes out, like it doesn't wait around for you. It just goes. Okay? So you really have to have that position on. And so I'll layer on some like now, and then I'll layer on some more later. Because a lot of times maybe it'll get flat, and you'll be able to get some really cheap ones as you get closer and closer and closer to expiration. And so my strikes need to be inside the plus and minus 1 deviation level, which pretty much accounts for every strike on the list, which is awesome. And let's see here. Putting that together on the list, we got for today's earnings calls, okay? We're going to have NASDAQ, Google, and then we're also a little bit later into that, we're actually going to have IBM on the Dow. Will be coming out at 4:10. So it looks like they'll be coming out just following. Sometimes we have some other ones come out at the same time too, but we'll have IBM coming out. And so that ought to have a bit of an impact on the Dow, which of course both of those combined can impact the NASDAQ and the Dow. And pretty much Google impacts just about everything in and of itself, just being the giant beast that it is. So be aware on the Dow too. Like I said, 410. 5 minutes is not usually enough time to get the kind of movement you want in and of itself, but the Google trade is usually a pretty good one. Now, let's say we want to test this out. We want to look at it. We want to just sort of see, what has been the past movement on this trade. How well has it worked? So let's just open a really simple chart, okay? And I'm going to open it on a continuous contract. So NQ pound dash pound. Okay. When I do pound dash pound on NinjaTrader, what that means is continuous contract. And Ninja will actually let me load a year of intraday data, which is really nice. Most platforms will not let you do that. So we got 120. We're going to do 15-minute bars because we're really concerned about that last 15 minutes. And instead of using everything, I'm going to narrow it down just to the regular trading hours because I really don't need the extended trading hours because I'm only going to 4:15. So I'm going to index futures regular trading hours, which is like basically pit hours. Okay. By doing that, I'm going to click OK. And we'll open that on up, give it a minute. It's 15 minutes of 1 year of data, so it takes a second to load all of it up. There we go. And then I got to get the historical dates of Google earnings releases. Okay? So there's a lot of places you can go. I usually will go on over to finance.yahoo.com. And we can do Google. Of course, you can also do Nadex. I have a bunch of articles now being picked up by Yahoo Finance. That's pretty cool. Going in here. So if you ever want to check out some of my Nadex articles, check them out at finance.yahoo.com. But anyways, let's go in and let's check out Google. And over here on Google, we can just go to it, and then we'll check out the information on it. There's a lot of different ways to get the information. I'm just showing you one easy way. And let's see where they reordered a bunch of stuff since I used to use this all the time. But let's see, we got filings. No, that's not going to help us for what we want. We want their earnings. They used to have something that's called earnings on the left side, so I'm trying to figure out where it's at. Headlines, news and info. And they used to make this so much easier. Let's see here. Come on. We'll go through. We'll find it together. So you can also go to their company website. But the company website doesn't really do a good job for you sorting the historical information. That's why I'm trying to find it right here. I also used to go to earnings.com. That was like a great place. But the last time I checked it, they had totally messed up the entire thing and how they laid all the information out. Made it pretty useless. So, but if we can't find it easily here, I mean, they literally used to have a little section that said earnings and estimates. So, see, earnings analyst estimates are actually missing. So look under analyst opinions. That's upgrades, downgrades. Yeah, they're just not being as friendly as they used to be. Okay, well, we'll have to check it out later. We'll go over to, we'll see if earnings.com cleaned up their site. They actually were down the other day. You know, every site, I guess, has its issues from time to time. But, yeah, see, they took down earnings.com. Can you believe that? That was like an awesome site. And, go over here. Another one I'll go to. So if that one's not going to do what I want, so I'll go to optionslam.com. Get a whole list of sites today. Earnings history, Google. Okay, here's the last four. There we go. That's simple enough. So it's pretty cool. It actually will tell you how far stock moves on average. So like same day, next day, you know, all that stuff. There's really, really good information on here. But that gives us what we need. I just need the time, the date, because I already know the times. Okay, so now that we got that information, finally, then I can use the data box, this little magnifying glass up here. Helps me sort of fly through the chart faster. And now we want to go to January 30th. All right. So January 30th. There we go. And pull up the crosshair there. Okay, so now we can go over here. We can look at this 15 minutes. Basically, what kind of move did we get? High to low. We got to move a little bit. Let's grab the toolbar on here. There we go. And use a ruler. Just measure it. How far did it get? So that's the high to low. We got 23 points right there. And this is like right before the earnings. Okay? We got 29 points to low. So another 6 points there. And let's say we just measured it from now, like, 2 o'clock. Then we can go over here at about, what was that, 1400? And to close, about 29, and to low, about 34. So expect somewhere between 23 and 34 points on that day. Let's go back to the previous release. We'll go back to October. And October 17th. I remember this one. This one was awesome. It was my daughter's birthday. Just got her a brand new pink 22 rifle. And taking her out to the gun range. My wife was holding the phone watching, just waiting on the final print to see where it settled, if it settled in the money. On the remaining positions we had. Okay, so we're going to go over here. And that day, actually, we had to hop in early because I wasn't going to be here for the show. So we hopped in around 12 o'clock. And we were looking at it, I was like, wow, this actually lines up well. And then it closed right over here. We had about 20 points on it. If we would have waited, it closed like right at the high. I remember that thing just pushed like right up right at the end. About 12 and a half at the end. So by getting around 12, we actually got a little more movement on it. Same thing with the one in January. Let's go back and look at October. Now that doesn't mean that that's always better, because sometimes you could get the 12 or the 10-point ones for cheaper. Okay, like later in the day, as more times went by. So let's go on to July. Right back here. Let's see what we got on the July movements. July 18th. Okay, that was a big move day. So release to low. Got 26 points on that one. Release to close. Getting at about 23. Getting in the trade around 12 o'clock. Release to low, or 12 o'clock to low, about 28. And around 12 o'clock to low, about 29. So about 23 to 29. It's pretty much the same as the January release. Let's check out April. We'll go back over here, a little bit further back, almost there. We got April 18th. Okay. And let's see here. Maybe that was the day where it came out. I remember one of the days it just literally was released like right in the middle of the day. Let's see here. April 18th. And that's the 19th. It's the 18th. Okay. So April 18th, this may be again the day. There was one day, and I don't remember which one. I have to do like a news search where it just came out in the middle of it. And let me see if that's the day, because that's a really, really small move day. Google earnings released early. I mean, that was 2012. Okay. Google, yeah, that was October. That was October 2012. And yeah, they released them early, and they just came out. Not only did they miss their earnings, but they actually came out early, so they did not have any time to. They had to wait like 4 hours before they could even reply. So yeah, it was not a good day for them. So last April was actually a pretty low move day. Okay. If we compare the two, 12 o'clock, I mean, there was nothing on the day. It was only a few points, which makes everybody nervous now. They're like, oh, I'm piling in, but what about? If we go look to like right before the release, I mean, we got about 18 points, though, right before the release. So, again, that's why I say some of that dry powder just before. And but we did get, a solid 18 points before the release is great. So you want to match all that up, beginning to end there, and it depends upon what time you got in on. But that one was the one slow one out of them, but the other one's huge, and the profit potential is usually somewhere between 50 and 900%. So, or actually 100% to 900% return on trades. So I can handle if we do get a loss here and there. All right, we'll be back right after this. Stay tuned.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. All right, so just to make sure this is clear, make sure you got them down. Let me pull up what we're looking at specifically on the strikes here. And again, you can layer these in as much as you want to. This is about at the money right here, so we're not really touching those. But what we're looking at, again, sort of voiding this whole section out right here in the middle and going out. And you'll notice the volatility. You see how it goes from 15 to 12 to 10 to 8 to 6, whereas this goes like 15, 10, 7, 5, and then like 4, 4. So even closer. So we have a little volatility to the upside and downside. Right now, I have personally layered in 35 24s, 28s, and 32s. A bot, and then on the sell side, so far I got 76s, 64s, and 60s. So that's pretty much how I'm putting my strategy together. Just again layering in more and more and more strikes as I go. I usually do about 10 on each side at a time. And when it's all said and done, who knows, 50, 100, 200 contracts. But anyways, check that out. That's it. So we're just straddling it. We're expecting a big move. And you can, if you want to do a safer method, is on that first one that gets hit, okay? That very first one that you take, you could go in and you could set a take profit to get out like at 40 to cover the risk on the rest of them. So basically saying if I go in and I buy this right here, if I go in and, what does this say? I sell this one, okay, and I buy this one right here. So this trade right here would cost me, I'll even see if there's one a little higher. I can balance it out maybe more. Yeah, we'll grab the higher one over here. Okay. So between these two right here, if I buy this one, I sell this one, okay, and sell this one over here for 10, or 10 of them. Place that order, go over here, place this order, okay. Then what I'm doing is now I can take profit when either one of them hits, say, $50. And so I put on a combined risk of $25. I make $25. Now I could actually take that $25 and I could use it because I mean, that's a closer strike, okay? I could use that to cover risk on further out strikes. So if I went in just now and I bought, the 3520s and I sold the 3500s, okay? So bought the 3520s, sold the 3500s, right over here, 3472s, I'm sorry. Sold the 3472s. Then I could use that $25 to, spend 9 here and spend, like 10 here if I wanted to. Or I could maybe go, I'm going to get the really cheap ones. I'm going to go get the $5 ones, which is usually what I do first, okay? So I'll go after like the ones that are $5 on each side. That's $10 a piece. That means I can get double the amount. So you can go double up on the 3532s and the 3460s. So if you can make $25 on that first layer and you can risk only, let's say $10 on each side on the second layer, then that would, if the first layer hits and takes profit at 50, the second layer is now your free ride. That's your big money trade if it does take off. And if it doesn't, it's okay. But if it does, then you basically made $800 on that side of the trade. Okay? All right. And you actually did double the amount. So remember that. So it would be $1,800. Anyways, stay right there. And we'll have another great show coming up for you right after this.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.